Financial information is needed to understand an organization, to understand the viability of an organization, and as leaders to be able to make decisions about managing and leading that organization. Financial data provides the raw material to drive material via the profit and loss and the balance sheet to drive the conclusion of the business of its financial position. The analysis of financial data provides the information to manage and track financial activities. Basically, organizations can gather financial data from internal resources and also external resources. We'll take a little bit of a look at that. And that's definitely the way when we're looking, when we're comparing our organization with other organizations, or when we're trying to project into the future the profitability of our organization. Internal resources refer to the business's own records, and external sources, no surprise, means third-party sources. So as any organization, Apple as an organization can obtain data from these resources. Internal financial data is usually obtained from an organization's accounting system. We've talked about that. That will be the P&L, the balance sheet, cash flow reports, these types of things. But always have the balance sheet and the P&L in mind. Whatever organization you're looking at and evaluating, whether you're evaluating that externally as an outsider or internally as a leader, these are the reports, the common reports that you're going to see. I've seen over the last 30 years of my career, I've seen profit and loss and balance sheets and had responsibility for profit and loss and balance sheets with every organization that I've worked with. So it's definitely worth spending some time getting your head around the concepts of each and just starting to understand each. P&L is all about profitability. Balance sheet is all about assets and liabilities. So what's how do we sit from a financial perspective? So internal financial data prepared by organizations, accounting staff. Like I said at the beginning, we're not trying to be accountants here. What we are trying to be is to work out how to evaluate, how to assess the information that the finance division is giving us to support our decisions. Their reports take account of the financial aspect of the department's operations and hence give the accounting and finance division with essential expenditure and revenue details incurred over a certain amount of time. You know, usually on a P&L, it often comes out every month, and within an organization, there'll be year-to-date figures. So the profit and loss as of February the 31st, 2021 looks like this. And then looking at other times, it enables us to compare, you know, quite often you'll have the profit and loss, the month to date, the year to date, and then a comparison of where the business is in terms of its budgets. And a number of us on this call, I'm sure, have been involved in the budgeting process where we're looking at the viability of the organization that we're working for and the part of the organization that we're employed by and how we're performing. As these reports detailed, the financial department can easily gather and interpret data in order to produce information to conclude the financial position of the company. That's really what we're looking to do as leaders here. Any questions, or I'll move on. I'll just pause for a second, just have a little bit of thinking in mind as to what a P&L might look like, what a balance sheet might look like. In some of the videos we'll see over the next few weeks, we'll see that. I'll also perhaps next week show some real examples as well, so we can start interpreting them together. Okay, when we're looking at in our decision-making process, as we said, we compare internal data with external data, or internal sources with external sources. And other sources besides the finance department in its own right might be, you know, Companies House, which is in London, records details on all companies. Every company has details of it in Companies House, along with its submissions. Company's website. If you're looking externally, you know, quite often you can see on a company's website, it's profit and loss for the year. And it's a really interesting activity to go to an annual report of an organization, flick through to the profit and loss and the balance sheet, and have a look and kind of assess that in your own right as well. You can relatively easily see the financial strength of the organization by looking at some of the things we're going to look at. Internal and external sources of financial data. Well, they often complement each other, as one source facilitates the accuracy of another source. Essentially, all the information we're looking at in the end is coming from the finance department of the organization. As such, it's essential to gather financial data from both resources, internal and external, in order to produce accurate information to determine actual financial positions of a business. Validity. So we've got to talk about validity in relation to the data that we're gathering. And validity refers to the correctness and reasonableness of financial data that we're actually looking at. There's no point in looking at any data if it's not valid. There's no point in looking at any numbers if they're not valid and they're not accurate, whether they come from internal or from external. So the company needs to assess and appraise the data which are obtained on a regular sampling basis for its validity. That might be done by an internal or external auditor. So in a lot of the organizations I've worked with, we work with large financial companies who, you know, often accounting companies or companies like Ernst & Young or Accenture, and they will essentially send auditors into the organization once we've, it's a little bit different with my small organization. I can do most of the accounts. I can do most of the accounting using an online system called MYOB. And if you have access to, you know, if you're involved with a small business, a lot of the financial packages that you can get will actually bring up a lot of these reports that we're going to talk about as well. So MYOB is probably the most popular small business accounting package globally. And when you set MYOB up, it actually for certain information. I run my business through there. I put invoices through there. I put my banking through there. I put everything through there. So at the click of a button, I then have the profit and loss for the business. Now, obviously, my business is a small business, and it's a consulting business alongside of what I do from my teaching perspective. A large business is obviously a lot more complex, and a large business submits its financial data, and it's shockingly, well, it's shocking how, not shocking, it's quite surprising to people sometimes that when we break down everything, the complexity of the final report, the final P&L is very little difference to a small business. Why? Because we're looking at money coming in, we're looking at money going out, and we're arriving at our profitability status. From a balance sheet, we're looking at our assets, we're looking at our liabilities, so what we owe to people, and we're looking at our physical health away from the profitability. So we're really comparing apples with apples in many respects, or at least creating the same types of information about the companies we work with. But as a large organization, they need to make sure that the information, or every organization needs to make sure the information is 100% accurate. And that's why often you'll see auditors come in. And if you're running a division, they might grab you in a room and ask you lots of different questions about the financial stature of the department that you're running or the business that you're running, so that they can establish anything that you perhaps not done correctly from a financial recording perspective, because that's the document that will be then submitted to government, etc. So just give a thought to that, but that's essentially where we're at. What we're saying if you really pin it down, this whole of this lecture so far, we've said, listen, an organization needs to produce certain financial documents, certain financial statements, which are going to be useful for us as decision-making tools from a management perspective. Okay, makes sense, right? And those generally comprise a cash flow, well, a profit and loss, a balance sheet, and a cash flow statement, which basically tells us all we need to know if we look at the right numbers with them and to be able to make decisions about our business. And it really is as simple as that. So I just stress this, don't overcomplicate it. Just because an organization is bigger doesn't mean to say its financial summaries are any more difficult to read. And I think that's a really important thing to kind of take on board, because a lot of people panic when people start talking about finance. A lot of people panic when people start talking about accounting, but really there is no need.